Claiming dependents on your tax return can mean bigger refunds and lower taxes. But did you know there's a difference between a qualifying child and a qualifying relative? These two categories could make or break your claim, and the rules aren't as clear as they seem. So, how do you know who qualifies and what it means for your taxes? Let's break it down in simple terms and save you money. Hey taxpayers, it's Tiffany Gonzalez CPA here with a very important topic for you: how to claim dependents and understand the difference between a qualifying child and a qualifying relative. As you may know, claiming a dependent can lead to significant tax benefits, such as eligibility for the child tax credit, the earned income tax credit, and sometimes even a larger standard deduction. But it has to be done the right way in order to maximize your tax return. There are specific requirements for who can be considered a dependent. There are two main categories: a qualifying child and a qualifying relative. Let's start with the qualifying child. To claim someone as a qualifying child, they must meet these 5 main tests: relationship, age, residency, support, and joint return. Let's look at this in detail. First, the relationship test. The dependent must be related to you. This includes your child, your stepchild, your foster child, your sibling, your half-sibling, or even a grandchild, or a niece, or a nephew. Essentially, they should be within your family, but could be any of these specific relationships. Next, the child must be under 19 or under 24 if they're a full-time student. The age limit doesn't apply if the dependent is permanently disabled, which is an important exception to keep in mind. Also, the child must have lived with you for more than half the year. There are exceptions though for temporary absences like school, military service, or medical care, where the time away still counts as if the child was living with you. Now, this one about finances. The child can't provide more than half of their own support for the year. So if you're the one primarily covering their expenses, they may qualify. Finally, the child can't file a joint tax return with a spouse unless they're filing to get a refund. For example, if they're married and both spouses have income, they may need to file a joint tax return, which disqualifies them as a dependent in most cases for you. Now, what if the person you want to claim isn't a child or doesn't fit the qualifying child criteria? That's where the qualifying relative category comes in. To claim someone as a qualifying relative, they need to meet 4 main tests: not a qualifying child, a member of your household, gross income, and support. Let's break this down. First, the individual can't be considered a qualifying child for you or anyone else. And if they fit that criteria under someone else, then they don't qualify as your dependent. Next, the person must either live with you all year as a member of your household or be closely related to you. This is a bit broader than the qualifying child rule because the relative doesn't have to be your direct descendant. It can be a parent, a grandparent, an in-law, or other close family member. This one is really important. In 2024, the person's gross income for the year must be less than $5,050. This includes wages, dividends, and even some types of government payments. So if they make more than that, they don't qualify as your dependent. Finally, you must provide more than half of the person's total support during the year. If they're covering more than half of their own expenses, they won't be considered your dependent. Now, let's cover a few scenarios that often trip people up. First, a very common situation. Divorced parents may both want to claim a child as a dependent. Typically, the custodial parent, the one the child lives with for the majority of the year, is the one who can claim them. However, with Form 8332, the custodial parent can release the exemption to the non-custodial parent. I already mentioned this other one, but here's one that comes up a lot: college students who are over 18 but under 24. If they're a full-time student and meet the other qualifying child criteria, you can still claim them on your tax return, though they did not live with you the whole year. And lastly, this final scenario that trips people up are elderly parents. If you're providing more than half of your elderly parents' support and they meet the income and support criteria under qualifying relative, you might be able to claim them even if they don't live with you. To wrap up, remember that a qualifying child must meet many different tests. while a qualifying relative also has tests but primarily relies on their income. Each dependent can potentially unlock credits and deductions that make a big difference on your tax return. So take the time to see if your situation qualifies, because it could be well worth it. If you found this video helpful, don't forget to hit the like button, subscribe to our YouTube channel, and follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.